Greetings and welcome to the latest edition of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners redomesticate out of volatile legal and tax environments to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, I am discussing the redomestication process specifically in the context of consultants and owners of small consultancy practices. I will then explain how consultants can use the same laws as large corporations to their advantage to relocate their existing LLC or corporation to a new state the right way while keeping their existing federal employer identification number, contracts, bank accounts, credit history, and track record intact. But first, a brief introduction. My name is Professor Chad Daniel Cummings, and I am an attorney and a certified public accountant, serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, together with a bachelor's degree in accounting and a master's degree in taxation, in addition to 12 professional licenses and certifications covering accounting, tax, audit, financial planning, and of course, the law. My firm website is www.cummings.law. Now, as you know, if you are watching this presentation, consulting is one of the few businesses where the state named on the formation certificate has almost nothing to do with where the work actually transpires. A consultant's assets are a laptop, a methodology, and a Rolodex, or at least it used to be, but you get the idea. The engagements may run across 5 states or more in a single year, yet the entity itself usually sits in one place, and that place was chosen for a reason that may no longer apply. Perhaps the consultant lived there at the time of formation, or perhaps an accountant suggested it by default. Years pass, the practice changes and hopefully grows, and the domicile question is never revisited as it should be. The cost of that inaction is quite easy to measure. For example, California imposes a minimum annual franchise tax of $800 per year on a limited liability company that earns $0 in revenue and layers in a gross receipts fee on top once income rises. So much for what was supposed to be pass-through income. New York, on the other hand, requires newly formed LLCs to publish notice in not 1 but 2 newspapers, an expense that can easily run thousands of dollars in the wrong county, and then charges a biennial filing fee, not to mention very complex and egregious state income taxes. Illinois and New Jersey each reach the income that passes through to the owner's personal return, as do many other states. All of this to say, a consultant who no longer lives in their prior state or who is considering relocating themselves and perhaps their family to a new state should seriously examine the question of redomestication. Now, the tax point matters more for consultants than for most business owners because of how the income arrives. A consultancy practice is typically a single member LLC, which reports income on Schedule C of your Form 1040, or may be taxed as a Subchapter S entity. So regardless, the profit lands directly on the owner's personal return with no corporate layer absorbing it first. Now, that is not a bad thing, but there is no separation between how and where the business performs its activities and what the owner personally is responsible for when it comes to income taxes. That sounds like a lot of gobbledygook, so let me try to boil this down and make it a little bit more ascertainable. Florida and Texas impose no personal income tax at the individual level. And further, most small and medium-sized businesses pay no business income tax in Florida or Texas either. The Tax Foundation data that we have reviewed in earlier presentations indicate that the average business relocating to a state without income tax retains or saves more than $12,500 every year. And if you watched our 50 state series earlier this year, you know that in some cases, that can easily reach 6 or even 7 figures of annual recurring savings. Now, there is a second consideration that consultants tend to overlook, and it has nothing to do with taxes. A consultant sells their judgment and their time. And judgment can be blamed when a client's project goes badly or has unexpected outcomes. Florida and Texas, to name two states, both maintain strong asset protection statutes and long established bodies of business law. The rules governing the entity are settled, unlike in Delaware and other states, and the courts that would apply them do so predictably. Predictability is a major asset and is worth a great deal when the deliverable is an opinion, as is often the case in a consultant's shoes. Now, three practical points to quickly close the loop. First, physical presence in the destination state is not required of the owners. This is important. You can redomesticate to Texas or to Florida or to another state without physically residing there. Now, it is true every state requires a registered agent with a street address in its borders, and it's very easy to arrange a commercial registered agent service to satisfy that requirement. We help clients with that all the time. Next, client relationships do not need to be disturbed because redomestication moves the existing legal entity rather than creating a new one. The federal employer identification number remains the same, and existing engagement agreements, master service agreements, banking, and professional liability coverage all continue without interruption. Finally, I would be remiss if I did not at least point out that tax nexus is separate and distinct from legal domicile. A consultant who performs substantial work inside a state may create ongoing filing obligations and payment obligations there, regardless of where the entity is domiciled. That is a question about where the work occurs and who benefits, not where the certificate was filed, and it should be examined alongside any change of domicile. Now, whether a move reduces a particular consultant's exposure to taxes and legal liabilities depends in large part on residency, on where the engagements are actually performed, and on where the clients sit. Those are questions that belong to legal counsel and to your existing tax professional, and they should be answered before making any decisions, not after. Now, with all of this context in mind, redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income tax repercussions, but only when performed with the strict formalities required by the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When performed by a competent professional, and that is an important caveat, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. All of that to say there is precisely zero operational or financial disruption, but only if you get it right the first time. That is why it is so important to work with a credentialed professional and save the DIY for home improvement. I have successfully completed redomestications from all 50 states, yes, all 50 states, and for limited liability companies, partnerships, subchapter S entities, and subchapter C corporations. So if someone is telling you it cannot be done, translate that as follows: we don't know how to do it and can't be bothered to learn. Now, foreign entity registration is simply not the same thing as redomestication. Do not allow yourself to conflate these terms. These different terms have different meanings. Foreign entity registration, also referred to as foreign qualification, does not change the company's legal domicile. That means if you're in California and you think that foreign entity registration is a way to move your company to a new state, the joke is on you. I'm very sorry to say, because you will continue paying that $800 annual fee to the California Franchise Tax Board in Sacramento. That's just one example. Foreign entity registration keeps the entity in the former state indefinitely and merely adds another layer of compliance and tax obligations in the destination jurisdiction, thereby leaving you anchored to that state you thought you were leaving. Meanwhile, a traditional merger, which is still not the same thing as redomestication, creates a new distinct entity in the destination state, may and often does require the issuance of a new federal employer identification number, and can trigger serious tax headaches. Finally, dissolution should not enter the conversation at all because dissolution terminates the company. Dissolution is the legal equivalent of administering the lethal injection to your consulting practice. Dissolution is a going out of business maneuver, not a relocation mechanism. Dissolution is often a taxable event and, to make matters worse, can expose the owners of the company, that's you, to unlimited personal, yes, you heard me correctly, personal, joint, and several liability for the company's liabilities, known and unknown. That is because the so called veil of liability protection no longer exists because the company no longer exists. If you think dissolution is a shrewd cost saving mechanism, you are in for a rude awakening. And if you have a so called professional suggesting dissolution as a relocation strategy, please seek better advice before you make a critical mistake. Redomestication, when paired with the change of personal residency and that is a very important a reduction or outright cessation of business operations in that former state can reduce or even eliminate state tax exposure there for the entity and its owners. Don't take my word for it, ask your CPA. Now is the time to consider acting, as the various state legislatures are actively considering changes to their respective states' laws to hinder or even eliminate the option of redomestication. If you have questions regarding potentially redomesticating your existing LLC or corporation, please utilize the link in the description or in the bio for more information on this nuanced process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Daniel Cummings of the firm Cummings and Cummings Law, and I hope that you found this information informative and thought-provoking. As always, the information in this presentation, like all of my presentations, is necessarily general in nature and is not legal or tax advice, nor should it be construed as such, because that advice definitionally must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations on these topics, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.